Right. Hopefully you can see the chart there, market profit, anything else. The big thing about, well, we've got a few people more coming. I bet it's Monday morning, and everyone's had such a busy weekend doing everything, going to towns and theatres and pop concerts and pubs, that we're a bit late coming in. Right. So, however, right, what we do, start of the month, February the 1st. As people were aware, of last Friday when we put the 4:30 trade, a lot of funds tend to at the end of the month exit their trades to start of the month. So we worked out that a lot of the funds had bought FTSE start of the month, the 5th and 6th of January. We saw FTSE rally from 6,500 to 6,900. And obviously, to the end of the month, it went from 6,800 to 6,400. Right. So we saw the sell-off on Friday. Yeah, mind you that all industries sold off. However, we therefore expect today at 8 o'clock, especially the FTSE, for those funds to come back in. Yeah, so we expect them, because they're long-only funds, we expect them therefore to come and buy the FTSE. Doesn't mean, when those of you who are new, doesn't mean we jump the gun. I know I bought the FTSE, but I bought it at 7 o'clock, so I'm a bit more in the money. I bought it at like 6,422. However, what we wait and see is for the price action. For those of you where the price action, yeah, we should see it jump where we are now, 4,446. That FTSE could jump 20, 30 ticks, yeah, in the first minute or so, once those funds come in. What we find in the FTSE is that it tends to take about another 20 seconds to get going. So the 8 o'clock, we might not see anything. We might do this morning, we don't know, but we wait for the price action. Those of you, the names that are coming up before, we're very much aware of that price action, yeah, that comes in. It was very clear on Friday at 4:30, and most we've got on it, not just in FTSE. I think the FTSE come off like 30 ticks in about 4 minutes, but the Dow Jones didn't come off 150. So that's my next point. What we found out last week, and a lot of people did say, trading the DAX and Wall Street and everything is too volatile. It's too fast. And in theory, I think on Thursday it moved 160 ticks in 30 seconds a minute. And that is, and if you're new to trading, or even like me, you're old to trading, that's driving on the motorway at 140 miles an hour. You can only do it for so long before you are going to crash or get pulled up or anything else. So therefore, a lot of you are new. We keep saying it. Yeah, have a look at Euro stocks. Yeah, I'm going to put FTSE up when you open because it's the first. Yeah, but the Euro stocks is a slow DAX. Yeah, and we're getting nice ranges in Euro stocks. Basically, it's 5 Euro stocks to 1 DAX. Yeah, so the Euro stocks move 10 ticks. You're looking at a DAX to move 60. Yeah, in a way, does that make sense? Yeah. So therefore, we look at that. So I'll advise this week, because we are going to be volatile this week with all the news that's coming out. Yeah, just think what you're trading, because the same thing. If you've got your risk management, whether you've got £300, £50, £500, £5,000 as your daily risk limit as such, you shouldn't be risking more than 3% of your account a day. What's happened last week is a lot of the new people come in and trade all the GameStops and BlackBerry and Blockbuster, you name it. They're happy to risk more. And reading the papers, people are happy to risk 50% of their accounts. That's up to them. Yeah, that's what they put down. And obviously, they're reaping the rewards because the GameStop's gone up. However, it'd be interesting to speak to them once they've lost 50% of their accounts. Yeah, we don't advocate that at Educator Trade, because why have one day ruin your whole account? And it doesn't matter if you've got £500 in your account or £500,000 account. You lose 50%. That's going to hurt. Yeah. So again, I'm going to look at the FTSE, because we've got 3 or 4 minutes. But based on the FTSE, first day of the month, it's a busy week this week. And even today, we've got Euro retail sales. We've got Biden talking. We've got PMIs everywhere. We've got German unemployment. And also we've got UK manufacturing PMI. And we've got the big figure of the day, 3 o'clock, ISM manufacturing PMI. You should all have done your calendars by now. I did mine Friday. It's written it all down here. It is a busy week. Obviously, the highlight of the week is the Bank of England and also non-farm payroll. You should know that by now. The first week of the month is the same figures every time. Non-farm payroll is always the first Friday. ISM the first Monday and Wednesday. Yeah, those of you who've been around for more than a month or so, get your calendars done. Okay. no excuse to do it Monday now. I wouldn't say it's too late, but I mean, let's get in theory. What are you doing Saturday and Sunday? There's not a lot going on. I didn't do a lot over the weekend. Yeah. Because the weather was crap, nothing else to do. So we're going to go into the FTSE. I've got it over here. Market profile has got 40-50 tick choice. I don't think we're going to pay much attention to that. In here, we've got the point of control. Those of you aware of the point control, you understand it. Those
Andy?
I will send you a
how you doing, mate? You all right? All right, guys. How you doing?
Morning, sir. That's very nice of you. So put your mute on. So therefore, the value doesn't come into it because we are expecting some fun
What's that,
buying.
mate?
Some fun buying for.
Oh, lovely. Yeah.
Hang on. Sweet. Can you mute yourself? Thank you very much. Lucky it wasn't personal. So again, we look at the FTSE. We expect that buying to come in. Yeah, that buying, as we saw on Friday, moved the FTSE down 20 ticks. So in theory, we can expect the reverse. But again, we wait. And there's no surprise that since what's the candle we got here? Since 7:15, we have rallied almost 1/3%. Yeah. Again, because of what's coming out at the moment in the volatility as such, I wouldn't pay much attention to charts. It's just strict supply and demand. If you've got, say, 10 funds having to buy the FTSE, it will go up. Then, however, once that buying dries up, yeah, you know what could happen. Yeah, you know, you go back to the first of the month in January, we had that massive rally. It was at 225 ticks, 4%. That went on for about 4 hours. So again, we rely on price action. Yeah, we're coming to open here. We expect it to be volatile. Yeah, but we wait for price action. There's buy or sell orders at market. Yeah, I've got the 5-minute chart up, and look at it. We just come off from 8 o'clock. We've just come off 20 ticks, 25 ticks. Yeah, this is how fast the market is and how dangerous it is. Yeah. And I'm waiting. I haven't gone long yet. I mean, I'm long down here on the trade, but if I'm looking to scalp, I haven't scalped, which is scalping in reality. All we see is sell orders. I'm long down here. I'm thinking perhaps I should have taken my profits before 8 o'clock, but I've done it for the start of the month. And we're seeing, you know, the FTSE is moving in probably 1 or 2 tick prices. If we go onto the DAX, for instance, it's probably moving for 4 or 5 tick prices. So if you're doing if you're doing £1 a pip in the DAX, you're not doing £1 a pip. You're doing £5 a pip. So let's get our risk worked out. Again, in the FTSE here, from 8 o'clock, what we were with, basically 40 seconds in, the FTSE's come off 20 ticks. Yeah, in less than a minute. That's how volatile the markets are. When we're looking at, people said with day trading, in theory, we're not hourly trading, we're not half hourly trading here. In the FTSE, you could have taken 20 ticks there in what, 10 seconds, 15 seconds. This is us being aware of the volatility at certain times of the day. The same obviously will come at 2:30 when Wall Street opens, and probably when Biden talks, and of course at 3 p.m. for the ISM manufacturing PMI, which is expected to be weaker than last month. We're going 59.2 against 60.7. Obviously, there's a few people speaking today as well, but we look at the FTSE here. That to me, we've yet to see the buying that I expected. But again, as I said before, I was waiting for that price action. Had it gone up to 55, 70, I would have jumped on it because then I understand who's buying it. But at the moment here, there hasn't been that buying that was anticipated, or the people who bought it here was anticipating. The other thing to a lot of people were up last night trading at 11 o'clock when the markets do open. It was very volatile. The Dow at one stage was 300 down, and I think then rallied to be 150 or 200 up, whatever it was. It was mayhem. And again, there was not enough supply and demand in there, so it's very hard to trade Wall Street. I was doing a risk management for a fund, and their P&Ls were all over the show. So it's again manage your trading. Maybe only trade 3 or 4 times a day, and you may have to change the contracts you're trading because it's too volatile. You've seen in the FTSE here to have that move in what we're at 8:03 now, 3 minutes into it, and really no one really knows what's going on. If you look at the candle here, it's telling us that we should have been short from 8 o'clock, but that went from 53 to 44 and second, so that was hard to do. So in theory, to me, we've only really had let's put a 1 minute chart, probably a 10 tick range so far. It was from here, yeah. here to here. What do we do? That's less than a minute. 53, 30 or 20 ticks. And now we've seen it coming down. Yeah. So the buying hasn't been there. And I think there's a lot of traders like me are thinking, if they're not going to buy it, where are they? Yeah. So I think we might drift down, but I'm still going to wait. We're still early in the day. We're 3 minutes into the day, and I feel like I've done 3 rounds already in a boxing ring. So again, we're patient as we come in. Obviously, the market profile will come in. If you look at the Q here, those of you new, O is 7 o'clock to 7:30, P is 7:30 to 8, and Q is 8 to 8:30. So Q, we've opened at 55 here. You could say, if you look at the market profile, even though I said don't look at it, the value high is Q. We've opened at the value high, and we've just gone straight down, straight through the POC, and straight through the value low as such. But in theory, look at it now, I don't think that market profile would have really helped you because that Q was in like a 10-second trade. Okay, those of you I've got to do one-to-ones with, we'll get on to early this morning as such. The other thing I've got to tell you, a lot of people were caught on Friday on the platforms going down. Yeah, we've had an email. We're on to IG. Most of you use IG like myself. Yeah, what you have to do when the markets are fast, because remember, every time you trade, your counterparty will be IG or CMC or Interactive Brokers or whatever you use. Yeah, so therefore, when it's busy, as it was last week, and almost untradeable because the market was moving so fast. Remember, IG, the other side of the trade. So they were freezing your platforms and not allowing you to enter or exit trades. The same happened to Robinhood, El Toro, and all the other new platforms. Yeah. So therefore, how do we combat that? Yeah. Well, the way to do it is that when you put your orders in, I'll quickly do it here on the sim. If you've watched here, we go in here, size £1, stop. We're going to put a stop in. Let's put a stop in, say 15 ticks. Yeah. Yeah. We press the button, it will work the stop for us. It'll come up, sold 1 point here. We go into our position list. Yeah. It will tell us here we're working our stop, our profit. We sold 1. We put a profit in straight away, 6400. Press. So this here, if you're watching, is now in the system. If the IG goes down, yeah, or whatever, those orders will still be working. Although the prices in IG will still work, any orders you want to put in won't work. So therefore, by doing it immediately, as you saw, you can put the stop in before you press the button. Let's do it again. So you see, we go into the FTSE here, go into sell, it's L1. I'll put my stop in, yeah, immediately here, yeah. I'll press the button. So as I press the button, I haven't sold it yet, yeah. So it hasn't gone through yet. Yeah. So if it suddenly goes down now, if I press sell, I haven't got my stop in. Yeah. It's insane. Now we put it in here. It shows my positions here. I now can come back. I have done my stop. Oh, it's working my stop in. Let's go down to here. It's got my stop in here again. So basically now I can put my profit in because it's not so much, although we like to have profits, we're more wary of our risk. So every time you trade now in these fast markets, and we're seeing how fast it is, FTSE's just flown back up 20 ticks, possibly, please tell me, look at here on your 1 minute chart, we've gone from 28 to new highs. And perhaps now with the big boys coming in, they may be buying the FTSE, the fund, but they haven't woken up yet. I haven't traded large, I'm still long for my trade because I'm looking to take 50, 60 ticks out of it. But we've seen that 8 o'clock opening, how messy it was, yeah? But again, the big tip there is to put your stop in and your trade in the same time. And a lot of people didn't do that on Friday and saw their big profits they took on because Wall Street was moving up and down 250 ticks. And the stops were painful again because remember the Wall Street rallied up 200 ticks and then dumped again. So the same thing with a quick look at the DAX. To me, unless you've got a lot of money in your account, yeah, the DAX is a very dangerous contract to trade. And when I say a lot of money in your account, I'd say 5 figures. Yeah, okay. The FTSE is slightly more quiet, but you're seeing here on a 1 minute chart, DAX 1534. You know, that's moved almost 60 ticks. Yeah, in what? 3 minutes? Dangerous. The same thing with DAX here at 724. We've gone from 135.55 to one, and almost another 50 ticks. Yeah. So the same thing. Just because other people are saying they like trade this and like trade the fast money, and all the newspapers about Game and BlackBerry and BlackRock, manage your account. You know, in theory, if you've got £100 in your account, you shouldn't be losing more than £3. Yeah. Therefore, if you make £6 or £7 a day, that's fantastic. That's 7%. Work on those people. Don't suddenly think, like, I read somewhere in the paper, like in Game Boy, somebody, I read it yesterday, he bought £39 of that GameStop, $39, and made $76,000. Wow. How believable that is. But I think reality, how we trade, that's not really going to happen. So again, work on your principles of your profit. Your profit should be 3 or 4 times more than your stock. If you've got a 15-tick stock in the FTSE, you should be making 45 ticks on your profit. And that's the other thing that people went wrong last week. A lot of new people sent their trades in, trading journals, and their profits and their losses were the same. If your stop loss is going to be 20 ticks and your profits are going to be 20 ticks, you ain't going to be going very far. Why is that? Because your spread between the bid and offer is 2-3 ticks. So every time you trade, you're giving up 2-3 ticks. So in theory, you think the hardest thing of all, think, well, I've got a 20-tick stock. A 20 doesn't work. You're going to have a 20-tick stock is probably 60 ticks profit. However, when the market starts to move up, you can work on your trading stock. Those of you who are aware of that, come back to it. You can find it on our beginners course or the other discussion we go through. But anyway, do your diary today. It's quite a busy Monday. Yeah. We might come back later on for Zoom before ISM or if any other news comes out. Remember, both Biden is talking, and I think there could be a rumour from the EU, obviously, about the vaccine news, whether von der Leyen will resign. So that obviously will move the market as well, but probably in the currency as well. So again, those of you who haven't got a new service up, you're trading blind, and therefore you can get it on Trader Mate. It doesn't cost you anything. Come on the discussion group and ask, and I'll send you the link over. Yeah, but at the moment, I said to a lot of people, technicals probably aren't that important. As we've seen on the market profile, we've gone straight up and straight down twice. Yeah. So again, trade on the news and take it easy. It's a busy week this week. Do your calendar, yeah. And obviously same as last week, later on in the week, there seems to be more meat on the bone. All right, everyone, have a good day.
Thanks.
Cheers, Neil.
Imran, I'll come back to you in about 5 minutes.
Sure.
Should we go at 8:30?
Yeah, sounds good.
All right then.
All right, I'll see you in a bit.